Good evening, everyone. Welcome to Trade Findings and Adjustments for Tuesday, the 3rd of December. What a ridiculous day in our market. And, I guess it's amazing how much a tweet or a comment can affect our market. So instead of trying to go through and find a trade for today, let's talk a little bit about what you can and maybe what you could and what you couldn't do. Let's just go through and let's analyze this day and let's show some pros and cons on what's available and why. With all that said, let's start off today and just put it into perspective, right? Will someone please tell me what happened? Because I know as I was at the hospital and I was looking at everything today, we were 100 points up on the Dow and about 13 up on the S&P. And then everything crashed on my drive home with about an hour and a half to go before the market even opened. Pretty frustrating, right? Comments on no China deal. Comments from Trump that said he might wait until after the election to sign a China deal, and it has to be a good deal. That's what he said, right? So let me go through and ask you a couple of questions. If it sounds like the deal is off for basically a year till next November, is the China deal baked into the market? Let's go with what we know. There are 15 of us here tonight. Is the China deal baked into the market? So I've got one that says must have been. I've got two that had put a bunch of question marks in, right? And I have one that says obviously not. So out of 15 of you, right? Out of 15 of you, I've got 11 that aren't answering, two that have question marks and say, I don't know, one that said must have been, and one that says definitely not. Can we find a more of a range of if it's baked in or not? So I'm going to politely say, I hope not. Because if it was baked in, then I feel we would have had a huge crash today on our market versus just, how do I say this? The China deal has to be more than just 20 points down in the S&P. It has to be more than 280 points on the Dow. It has to be more than 47 points on the NASDAQ. So we tried to talk about this a couple weeks, and this is my premise for being long. My premise was I'm looking for some kind of China deal before the 15th. Because the tariffs that get put on the 15th like double what's currently in place. The China deal has to be worth more than 1% on the Dow, then 0.66% on the S&P and 0.55 on the NASDAQ. The China deal has to be worth more than that. So is the China deal baked into the market? I would go so far as to say, obviously not, which means when we do get something, we have at least 3 to 5% upside. And maybe you can add that from 4 to 6 because we shaved a percentage off today, right? So that's just a little bit in regards to our market. Now, are there other parts to the reason why our markets are going down today? We had Trump meeting with France over, I'm just going to call it digital taxes, right? And we imposed new tariffs on Brazil and Argentina, right? So with that said, how much of our drop today was based on that? And what's really funny is we've always had tariffs on certain things all the way across the board. We just, wow, Rich, that's true. We just have a president that uses it. And I'll be honest with you, sometimes he uses it pretty well. Boy, we put tariffs on $2.4 billion of wine on France. And guess who wanted to meet with us immediately? Guess who made an invite and said, Trump, let's talk. A comment just came in, only China matters here. The rest just tools for the main concern. Yeah, the rest could be white noise. So if I throw this out to the group, how do we handle today? If we throw this out to the group, so you wake up and what do you do? Notice how I had a couple drinking songs on before we started today, right? Could have another beer in Mexico. Bottoms up. What do you do? Interesting. A comment just came in, still betting up with stops, stop pits. So yeah, someone still thinks we're going higher, but believe it or not, the market doesn't trade straight up. A comment was made, very smart. Look to see if support levels have broken. Definitely, right? You might need to protect some positions, but follow the trend. So that's another one. Let's talk about protection. And that's where I was going, looking for someone to put that in. But the short answer is today the day you protect? Give me a yes or a no. Is today the day you protect? So I've got 4 no's. No, no, no. No, too late now. No, if chart support. Probably not, but I don't know why. Lance, I think that's about the nicest comment you've ever said. I would have expected Lance to say, yes, you dummy, or no, you dummy. That's amazing. So we've got 17. So just to let you know, 1, 2, 3, 4, 5, 6, 7, 8, 9. We've got 9 no's. Jeff Schaffner, I see you're here. What are your thoughts? Lee, I want to ask you. I know, Lee, you've been in the education. What are your thoughts? And David W., I know you've been in an education. What are your thoughts? What are your thoughts on what you should do? David W., probably not, but to be honest, I don't understand why not. David, excuse me, I think that's pretty commendable. I guess that, that does make sense. And I think that's what we're going to go over with tonight. Once again, Lance just typed in, no, but then you have to suffer. And I know you're not about suffering, so tell us what you're going to say. No, it's not about, no, you're going to have to suffer. You're not into suffering, so tell us what you're going to have to say. Interesting. Jeff and Lee, if you have a comment, put it in. So let me go through why. So why not? And it really comes down to the price and volatility. So Abraham, long-term trade to short-term leash. That's my motto for 2019. Smart thinking, Abraham. Really smart thinking. So it's the price and volatility. And I'll be honest with you, I did protect one thing today. I protected one thing because this was our market. Our market, for all intents and purposes, here was our day today. Started off ugly, and it got better. Think of all the people that first thing in the morning, and let's put this into a real perspective here. I'm going to put a couple pictures in here if that's okay. Come on, catch up. My computer's a little bit slow. I'm going to put that one in, going to put that one in. So all these poor people that at the open, 5 minutes in, because I mean nothing got filled the first couple minutes, right? All the people that got filled here, or filled here, or filled here, all of the fill through the first 25 minutes, big volume, huge volume, had to have been pissed up here. Awfully hard to sit through something like this. And to be honest with you, I normally try to wait till the first hour. So right here, well, I guess 8:30, 9:30, so I guess it's right here. That half hour for me was the worst. As I'm on the phone with Keeve and on the phone with Jeffrey T. Smith out in Colorado, and we're all sitting and talking, you know, primarily Keeve this morning. Is it going to come back? Is it not? And here is a problem with using options or with using stop losses. All of your stop losses that you were looking to use that really were protecting things way up here, when the market opens up down here and down here, and it goes through this and that, all your stop losses are triggered. All the stop losses in a market order that gets triggered if the stock falls below a certain price. So you sold out way down here. Apple was the one that I saw that was most telling today. There was huge amounts of volume on Apple, especially at the open. Huge amounts of volume. Stop loss volume. Stop loss volume, and it seemed to be right at 256.5. $256.5, finished at 259. And it was weird. It was, if you looked at block orders, it was weird. It was just coming on through and big blocks that were stop losses. Comment, it came really close to my adjustment point, but it didn't these days and need to be in a calm mode. Okay. I just say no, but it's all difficult for me to figure out. That one was for Lee on what you should do. Well, here's the problem. The stop losses triggered people out at the lows today. So stop losses triggered people out at the lows today. Come on. People out at the lows today, and long puts were / are way too expensive. And let me show you what I mean there. I did go through with some long puts that I had sitting there. After last night, I had tried to put some long puts on and had them sitting there at 1070. My long puts triggered and were filled at 14. With at the time Boeing only being down as little as 88 cents, which going off of the delta would have only had at 88 would have only had a price increase of roughly 30-ish cents. So at the most, these January monthly puts should have been $11, but they're $14. So what is that $4 or $3, excuse me? What is this extra $3 in today's price jump? What is this $3? Because I'm picking on stop losses, but buying options today would have been no better. What is this extra $3 in today's price jump? Keeve typed in volatility. Volatility. And what happens tomorrow if we get a tweet that says, hey, it looks like China's back on? What will happen to these $14 puts? Volatility crush. Notice how it's in red, right? They'll drop back down to the $11 range. Yes, I did. Keeve just let me know I missed his pun because he typed it in volatility, Killity. Yes, I totally missed it, and I should have given you credit for that, Keeve. All right, Kevin, so you just showed me how we're overpaying. In fact, what we bought today, when these were actually filled, Boeing was only down $1.22. So I missed about 88.22. I missed about 44 cents there. when I actually got filled. And not only that, Boeing then fell an extra $3, I'm pretty sure. Let me check and find out where Boeing actually finished at. So Boeing finished at 350.71. Down 310 today. That's after hours. So it's down another $1.37. Finished $3.10 down, which means when I put this on, it's closer to 354. So it fell another $2. And what we paid $14 for already lost $1.75. My puts sucked. The stock has fallen an extra $1.88-ish. And now I did my stocks fall an extra $1.88-ish. My puts lost $1.75. And I know someone's going to say as I hear this, well, shit, options suck. I beg to differ. I'll be honest with you. Some of the protection we did have on some positions worked extremely well today. The problem is the problem is that we have to suffer through some pain looking for our Christmas rally. Last week it was amazing, and I'll be honest with you, today was not my worst day in the market. It wasn't even my top 10-ish. But yesterday and today were my worst 2 days as a dollar figure. Part of that is because I don't have a lot of options in the portfolios. Part of that is because right now I am letting some things ride for what I was expecting to be a Christmas rally, where we're significantly long. And a comment just came in. I absolutely love it. This is from Abraham, and I've known Abraham for over 10 years. He's my Brazilian friend. Having options means you have liberty to make some choices. No option means that you're dead. Okay, I put in the and you're dead. So, plain and simple, the question, and there's 3 questions that just came in, so I'm going to get to them. The first question is, so Kevin, why did you protect Boeing? If you didn't protect anything else, why did you protect Boeing? And I just happened to take these because they matched up. In all honesty, what? 3,900 shares of Boeing, so I just kind of took these bits and pieces. Why did I protect Boeing today? Because the bottom for Boeing, since it broke 360, is down at 330, 320. So I'm more willing to protect some Boeing because of where the stock can go than anything else that we are in. Boeing's bottom is down in that 330, 320 range. And because we're going to have the FAA in front of Congress, I believe, tomorrow, I just want the bottom's quite a bit farther from where it's at right now. So for Boeing, I'm willing to overpay to protect because of where it can go to the downside. Now, am I willing to do that on Apple? It was one of the hardest hit ones today. Well, technically, Apple's still bullish. And my downside for Apple, based on this chart, is really at about 255. It can be 245, which unfortunately is $15 down lower. It's not 30. How about Disney? Dang it, our support was 150. It broke support today. But we still have 145, and that'll probably be my line in the sand for Disney. What about Baidu? Dang it, these dang Chinese, right? Man, Baidu held up remarkably well today. Finished off low, came up higher. Yeah, we were still down 286. But for essence, it held that 115 point. You know, it was pretty cool. Visa, that yesterday was left for dead, right? Visa was up 11 cents. Go Visa. Left for dead, not a stock that you should own. Held 180. Ford. Only down 12 cents. Closed at $8.89. It is below $9. $9.50 Ford on the way down. The biggest one that I really worried about, Under Armour. Down 1.79%. Only down 33 cents. But is able to hold 18. So, this begs the question, right? And who was it that said that? This goes down to Maud. So Maud asked, what if we don't have a Christmas rally? So more of a teaching event. What do you do? What do you do if we don't have a Christmas rally? What do you do? Hopefully I'm making you think here. Oh, great answer, both of you. I'm going to hold off before I say what both of you just said. Ooh, Keeve just said it depends on the reason why. True, but I don't care what the reason why is. What if we don't have a Christmas rally? What if we head the other direction? What do you do? There you go, and Keeve just said it as well. So let me give you the answer, right? 3 of you just said it, and Keeve knew it. He was trying to mess with my head. What if we don't have a Christmas rally? Which means we're going to keep going down. We protect. Now, the question that came in is, but how do we protect? Next up day in the market, we add protection. It's that simple. And it doesn't necessarily have to be a huge up day. I now have 39 contracts that I can judge the volatility with. The next problem is, well, what if we get our China deal? Then we've protected for nothing, and we're going to be in a 4 to 6 week period of time that we are looking for adjustments to lessen the cost. A good protection strategy would be a bear put. On Boeing, it would be really smart for me tomorrow to go add short puts at 320. It would be really good to have a short position because as volatility crush occurs there, they also will lose that volatility crush. And you're going to have a bigger credit than expected. On some positions, it's time to add some short calls to them. Where we'll get that volatility crush on those with the bounce higher. And the question is, when do we do it? I would like to think tomorrow. And you don't have to protect everything either. If Boeing gets back up, if Disney gets back above 150, I'm going to be okay. I'm not going to throw anything on Disney. If Apple gets above 260, I won't put anything on Apple. Ford gets above $9, I won't worry about Ford. Facebook, in my opinion, did extremely well. Only down 88 cents or 0.44%. 0.44%, not even 0.5% down. Visa was amazing, held 180. Where's Bank of America? Bank of America lost 1.76%, but it held 32.50. It actually closed at 32.84. Futures for tomorrow, they look down, but they're down 4 on the Dow, 0.5% on the S&P, and 2.25. I'm sorry, it just changed. Flat on the S&P. NASDAQ is down 0.75 and are flat on the Dow. So we might have a flat day tomorrow. Which, if I see my Boeing lose $1 or $2 tomorrow on a flat day, I know that some volatility is being sucked out of the market, and we can do some protection on it. This is a great day to see the what ifs in your markets. It's a great day to see, I'm not going to say a problem, but to see in option trading where you don't have some of where option trading can be hard. Please don't think everything works 100% of the time, because it doesn't. But option trading on stock today that was protected, man, we looked amazing. On stock that wasn't protected, we got our butts handed to us. And if you had tried to protect in panic, you got your butt handed to you coming and going, in all honesty. You got your butts handed to you on losing on the stock like Boeing and losing on the protection on Boeing. This was part of the reason why on Monday I was unable to really protect Boeing. Monday was even worse than today, for crying out loud. Next question that I didn't answer. So, Kevin, why aren't you always protected? Right? And so the correct answer there is if you're always protected just doing straight long puts, it really is somewhere between 16.8 to 22, maybe as much as 24% of the value of your stock you would be spending on protection. If you're always protected on your stocks, my question is, why the hell do you need technical analysis then? You don't need technical analysis if you're always going to be protected, because it doesn't matter. And the worst part about it, if you're trying to always be protected, is as your stock goes up and you're protected down at a lower number, and then it comes back down to that number and your protection expires, and you're now protecting at the same price and have lost the value of your protection. Well, Kevin, you can go way in the money. You can, which is paying too much for protection. Please don't think that the stock market's an ATM machine. Please don't think that trading or making money in the stock market is easy. If you could see the pressure and the worry and the comments that Keeve and I had in our conversation today, and Jeffrey T. Smith and I had last night, we worry about your portfolios every single day. It gives us white hair. It gives us stress. It gives us, okay, what are we going to tell a client that calls us? Yeah. On days like today, our job sucks. And it's really rough when some of the people we have are family or what we consider close friends. I know every single one of your situations. There's a gentleman here who this is all the money he has, and he's needing to pull from it. There's a gentleman here that also this is a big chunk of his money, living out in California, and he's trying to see what kind of lifestyle he wants to live, if he's going to buy or sell his house or keep it. I've got a gentleman here that this is a good portion of his money that likes to fish out east. I've got a gentleman here that it doesn't matter one way or the other. I've got a gal here who this is her 401k, and if I remember right, I even think she's Canadian, that works in New York. I've got a portfolio here for someone that this is everything that he has saved from his 401k, that he still has time, but he will have to pull from this here in about 10 years. That's how we look at your portfolios. It's not just money. Each and every one of you, Keeve and Jeffrey and I, know your story. We know what your money means to you. We wouldn't ever dare just let it ride on a fund or an index. That's stupid. So days like today are tough days for us. In all honesty, I was up all night in the hospital last night, came home, talked to Keeve, saw what was going on. 8:30, 9:30, 10:30. I slept from 10:30 to 1, so I've had an hour and a half of sleep. Watched the market close for the last 2 hours. Went back to sleep at around 2:30, got up at 6:30 for this class. I'm going to have 5.5 hours of sleep today. I'm back at a hospital, and my poor mom, hopefully she's going to sleep tonight. um, but I won't. And I'll be up all morning ready for a phone call with Keeve tomorrow or Jeffrey T. Smith, and we're going to be going over what's going on and where we can get that protection on. And it most likely will be in a bear put scenario where we can take some of that credit when some things come to pass. But I just wanted you guys to understand that there's a time when you do and you don't do something. If I can make a quick comment, if you're following other advisories, I hope to hell no one's putting on trades this week. Bearish or bullish. I'm showing you Boeing right there on the screen how it's not going to work if it's an option trade. You're screwed. This should be a buying opportunity where we might pick up a couple extra leap long call positions, where maybe we're going to look for people that have cash where we can find a buying opportunity on a cheaper stock. Unfortunately for Keeve and I and for Jeffrey, we know your backstories. We know what your money means to you. We know how much we're trading that's yours and what you have. We know if your homes are paid off. We know all the backstories, which gives us a huge amount of added pressure to make sure that we're always doing what's in your best interest. That's the difference between a small guy and a big guy. That's the difference between a Hurley Investments and a Goldman Sachs, a Fidelity, a Morgan Stanley, TD Ameritrade. You're just a number. It's thrown in there. They don't even look at your portfolios every day. Keeve and I are going white-haired over it. But this is why we did what we did today. Our opportunity is looking to add some protection on our next up day just to get through at least through the 15th. That's our next hard deadline. And we'll see where we end up. Are there any questions that you guys have that I can answer in the next 10, 11 minutes? David, Lance, and Maud, thank you guys. Thank you guys for understanding. We've got some clientele that doesn't understand. And actually, there's 17 here tonight. For you 17, let me give you guys a hand. Let me give you guys on an understanding of caring enough about your money to spend the time with us so that you understand it. Hey, Rich brought Jim and I to here. Thank Jim. Welcome to the group. For those that don't know Jim might be the newest one entering Hurley Investments, but at least he's shown an interest on what's happening and why. So for those of you, there you go. Jim, a couple people are saying, welcome, Jim. Welcome to our small family. So actually we have 18 here, right? 18 groups of people here. Lance, if I know you, you probably have your boy and your brother there with you. And David W., I'm sure you and your wife are sitting there. Glad that you're here. Jim says thanks to all. But this is what we do. In fact, it's time that people care more about their money than not caring, I guess, right? Since 2008, really, if you want to go back to since 2000, the volatility in the VIX kept up from a 5 to a 10. Never goes above 10. And off you go from there. Quick question, why long leap calls versus short time calls? So Jeff, the leap long calls will have the least amount of volatility or increase in those positions. So leaps, anything that's out a year or more will have really next to nothing, a couple pennies, maybe a nickel. Whereas your short-term call positions will be way inflated in price. You're, for all intents and purposes, 310, you're looking at about 9% increase in price, which evaporates when our volatility changes. So the reason why you don't want to try to take advantage of something shorter term are these Boeing long calls right here. It's a great example. If you went shorter term on long calls, you'd have the same thing. What you bought for $14 today, even if the stock had gone up $2.50, might only be worth $12.25. So that's why you're not looking short term right now, you're looking long term. Again, thank goodness we had some things protected. Everything we had protected, even if it was out of the money, Rich, you might need to explain that to Jim. Even if it was out of the money, we made more on our long puts today on stocks that lost money. We just don't have everything protected right now. Unfortunately, right? But welcome to having someone that's going to talk to you, 3 times a week on what your portfolio is doing. Welcome to caring enough about your money that you're willing to spend your time to know where it's happening and why. Jeff, does that answer your question? Any other questions? Damn it, Lance. So Lance asks, Kevin, why didn't you protect on Monday? And I actually think Keeve made that same comment. As we talked about it, why didn't we protect last Friday? And the short answer is that we're still following a trend. And the trend is still bullish. There are down days in your trend. The stock market doesn't go straight up. And the down days last week, the honest answer, we had some down days last week that we looked excellent on. That the market's down 0.3% and we're up 0.71%. A 1% switch on our market. So the answer is we suck at finding tops and bottoms, just like everybody else. If you're trying to call tops and bottoms a market, it's a fool's game. We discussed it. We had an opportunity to protect yesterday that in hindsight, maybe we should have. And the neat thing is, by the end of the week, we might be able to look at you guys and say, we didn't protect. And all of a sudden, guess what? China realized, oh, crap. The United States is waiting to wait till next November. That's pardon the way I'm going to say it, that's a shit ton of money that's going to be paid in tariffs that affect our companies. We buy $500 billion worth of stuff from China. Do you think we're buying $500 billion worth of stuff this year? They don't buy that much from us. And unfortunately, a lot of what they do buy is agricultural. They, 150 billion is what they buy from us. And 60 to 75 billion of that is agricultural. We spend 550 billion that we buy from them. It's a huge imbalance. It would wreck their economy if we're going to wait till November. So I do still think, because the numbers validate that a deal has to be done, and because a deal has to be done, I'm really hoping that we look like geniuses the end of this week, at least by the 15th, right? So yes, and I know you're going to ask, Lance. So Kevin, if you think that we're going to have the rally and we're going to get the China deal, why are you going to protect? And it's simple. Because what if I'm wrong? If I'm wrong, Lance, I can't let your portfolio lose 10% in a month. That's not the way Hurley Investments works. Lance, if I'm wrong, I can't give up all of your gains for the year and tell you, don't worry, we'll get it next year. Don't worry, I'm going to stick you in another fund. Can't do that. Good night, Abraham. And Jeff, I'm going to assume that thanks means I've answered your questions. All right, guys. Hey, have a wonderful evening. I hope this was a learning experience for you. I hope this helps you understand what we're doing and why. I hope this also helps you understand the amount of time and effort that Keeve and I put into, and Jeffrey T. Smith, I'm going to give you a little bit. I hope this allows you guys to understand what we go through and how we spend our time with your portfolio every single day. Have a good evening. Thank you, Rich. It's actually Mom for the next couple days, and then Pop is on Saturday. I'm just a freaking nighttime fool. So yeah, so someone asked, by the way, Kevin, what are you doing? We have found it in my family that if you're in a hospital, you want someone there always. When my dad got his cancer and everything, during the night shifts, as you have trade overs and stuff, my family caught a wrong medication that could have been fatal for my dad if we hadn't have caught it. And really, they were just doubling up on a medication. One shift from the other shift didn't know that it was delivered or administered to them. Even through the computer, it had been pushed down since so many things were wrong. The delivery and the administration of the medication was pushed so far down the screen that they didn't see it. And, you know, kudos that we caught, hey, he just had that medication, you know, an hour ago, and you would have double dosed on something that he could only have every 6 hours. So it's our family belief that if you're in the hospital, we have someone there with you always. And it just so happens that, you know, back in the day from driving trucks and being able to sit in jail cells all night long, I do really well getting a nap and staying up all night. So sucks to be me, but that's been my responsibility and the brothers on helping family out. So that's what we're doing. All right, guys. Hey, have a good one. Appreciate you being here tonight. Rich, go back to My Hurley Investment and you'll have last night's commentary is there, that if you and Jim are bored, since there's not a good game on tonight, you can take a listen to that one. This one, I'll do the best I can to get it up first thing tomorrow morning. I do know that obviously I'll have a little extra scrutiny by the SEC on getting stuff posted that could be trade related. This one, though, is not trade related, so I'll just try to push it on through. All right. Hopefully nothing serious, right, Rich? But yes, don't hesitate to go back and look at it. Everything's posted on My Hurley Investments. You guys have a great evening, and I think we'll look forward to talking to you Thursday morning. Good night, everyone.